Hi, I'm Bert Nussbaumer from macrobeat.co.uk. We didn't have any significant data this week, and only today where we have the global PMIs, which Europe kicked off this morning, which surprisingly stronger data. But the two key events this week obviously were the EU summit that sort of dragged into early of this week, that finally produced the EU bailout package that we've been waiting for. It wasn't quite a big bang that we expected after it's been downgraded on the ground side from 500 billion to 390 billion. But looking at what the euro has done ever since and what BTPs have done since, I would say the market still sort of honored it and looked at it in a positive way. The other thing which I've been blogging about and talk about the last few weeks, this deterioration of the US-China relationship, seems to finally, as if the market starts to realize that there is a problem. The Pompeo speech yesterday, whoever hasn't seen it should really watch it. Quite an aggressive speech against the Chinese Communist Party. He really stopped short of calling for regime change, which obviously would be the total escalation. But generally speaking, the equity started to sell off. The market starts to realize there is a problem. And I think the other thing that we've been talking about, the continued outbreak of COVID-19 in the US and some of the states really starting to lose control over the virus, really seems to finally fade into the market, realizing that the strong June data was probably something of the past. And as we go forward, the July data will just probably see weaker data and the risk of a double dip. I don't really have any fancy slides for you today on the macro side, so we dig just straight into the sort of market charts. The first chart I have for you is the euro dollar. On the euro dollar, you see we did finally break out above this 114.50 area. That was a sort of big Fibonacci resistance from the last sort of 1 or 2 years. The dollar is really in trouble. In terms of the euro, 117, 118, the next sort of areas of interest. On the next slide, the DXY, really the same after having consolidated between 96 and 98 really in the last sort of 2 months. We are now taking aim to break the bigger areas down here at 96, below 96. We traded down to just below 95 for now, so as long as we stay below 96, I would think that the 95.5 down to 94 is really the sort of next area of interest in the DXY. So the dollar is looking weak, and I think it is to continue. The next slide, this is the Dow. We continue to range between this 200-day moving average at 26,255. On the top side, we have this 26,950 area, the sort of gap area from early June. As I said yesterday, the big push lower on the back of the Pompeo speech on China. As much as I believe this could be the start of equities finally turning back down, reality is, as we see on the charts, nothing actually has happened yet. We got to break 26,250. Once this happens, I think stocks are turning down for good, probably heading back down to 24 or 25,000. The next slide, gold. Gold has now aggressively broken higher. This is really on the back of a weak dollar. So the weak dollar was a trigger for this next leg up in gold. And we just have about $20 left to touch the big high from 2011. On the last slide, we have silver. God knows what happened there, and the answers on the postcard really. We had an 18% rally out of nowhere over the last few days, or really almost all in one day. Yes, the trend makes sense given the weak dollar and given what we've seen on the gold side. But on the other hand, it doesn't really justify an almost 20% jump in one day. So I still haven't figured out what happened. There was some news around Mexican silver mines closed last week, so we'll be a bit late to react on that one. But not sure what is in there, whether there is some technical element that happened. But obviously, same here, same direction. Metals gonna trend higher, I think, in the next few months, with dollar weakness probably to persist. This is really me. Thanks very much, Bert Nussbaumer, macrobeat.co.uk. Have a lovely weekend. Thank you.